The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN in the beautiful Keys of Florida, Isla Mirada. We got a little bit of on-location week going on, and we'll kick things off with the market in positive territory. We missed quite a day on Friday. All markets escalating to lower prices, having to do with the new variant of COVID. Looks like those fears were overstated. At least that's what the market is saying so far this morning. We got the S&Ps rebounding 52 points right now. You're positive by 1.1% right now. You got the NASDAQ 100 up an even 200 points. That's 1.25%. Dow up 373. You have the Dow down about 1,000 points, even 1,100 points at one point on Friday. Now, Friday's action, interesting action to say the least, right? You get an escalation. Now, futures opened Thursday night, 6 o'clock on Thanksgiving with the half day on Friday. Market escalated to lower prices right out of the gate on Thursday. I got the Dow futures up here to kick things off. There's Thursday. Let me back it up a little bit more to get the full action in terms of the overnight from Wednesday. Yes, there it is. The sell-off really begins at about, I want to make sure I'm right here. Yeah, there is your 6 o'clock action on the futures. Dow was trading at 35,821, actually traded down almost 1,200 points there to the lows of 34,626. Now, interesting, that was last night. Okay, on futures opening. The market reassessing those fears, though, trading higher. We got the Dow up 35,214 right now. The Russell was down 4%, I think, at one point. Look at that escalation from about 2350, call it 2340, down to 2206. Just like that, the Russell has bounced 73 points from the lows we had. You see the action on the sell-off on Friday's half day. We've reclaimed some of those losses. Bitcoin had some volatility as well. It's up $3,200 today. Bitcoin traded down $6,300. They're saying they do not have sound in the den. There we go. Thank you. 59,910 down to 53,600 Bitcoin trading with the market. Interesting volatility. Crude. How about crude selling off on Friday? You go from $78 to change down to $67, almost like we weren't going to use crude ever again. And just like that, crude rebounding $5 to $72.71 this morning. We jump around to gold. Gold right now sitting at $17.89. Gold traded lower as well. Almost everything was selling off. We're going to get into what did not sell off on Friday in a moment as well. What did not sell off is you had notes and bonds trading higher for sure. You got the 10-year climbing from 128.03. Yes. You know, it's tough to correlate my charts here with Thanksgiving missing, with a half day on Friday, just cluing into where the differential is. You now have the 10-year trading 130.01 about. We were sitting at 128.03. Things really escalated for Friday's action. You see the climb up to above 130.18 almost on that 10-year. And let's jump over to the VIX. Volatility index right now. VIX spiking to almost 29 on Friday. We back off to 24.41. Still a remarkable amount of volatility priced into this market. The new variant, you could call it cause for concern. I don't think it's cause for concern in terms of what the market did on Friday. And we'll get into that in a moment, but the market agreeing, to say the least, as we have the S&Ps popping 50 points with about 20 minutes to go until the start of the day. Now, the COVID variant really drove everything on Friday. You had, whether it was travel stocks, you had Moderna trading higher on Friday, right? Holding on to those gains this morning from 280 up to 340, now up to 370. Talking about that even the vaccines could incorporate that new variant early as 2022, early 2022. You know, the fears of Friday almost were like we were seeing the market sell off when COVID first appeared, as in the market reassessing everything. And yes, the biggest fear factor to the market would be if we got a variant that could evade the vaccines, because then unfortunately people would get sick again, which would fill up the hospitals again. The only way that shutdowns are coming, folks, is that if hospitals fill up. That is the fear that I look at for the market. If you're going to look at if anything can happen in this market, think about if anything plays out that could cause hospitals to fill up again, because that is where, unfortunately, you start seeing hospitals fill up. You start seeing hospitals having to turn away people who are sick outside of COVID, whether it's just needing basic surgeries, treatment for acute care of any kind. That is where there would be a massive problem in the market, where you could see shutdowns again that could really hurt the economy. I don't see that happening right now, and that's probably what scientists are saying as well. You know, the fear is present. As long as this thing continues to mutate at the level that it is, it's a possibility. But man, talk about a little bit overblown in terms of 2.5% down. Russell down about 4%. Markets rebounding today. It was a very light day of volume, of course, on Friday as well. Interesting that that's the day that this news starts to come out, as in if you're really going to drive some market sentiment, maybe you try and do it on a day where you have less participants, with the ability for that fear to be exacerbated to a certain degree. But nonetheless, that's Moderna. They are up higher. Let's check out Pfizer. Pfizer shares as well, spiking on the news on Wednesday, spiking higher again today, up to about 55.17. We jump over to some of the travel stocks. United, down from 47 to 40 on Friday. We're popping back to 43 right now. Delta Airlines from 40 down to 34, back to 37 and change. Now you jump to the cruise ships, down to $19 for Norwegian. We're back to 21. You take a look at Norwegian. This is where, folks, you know, I mean, we had tried to dabble in this in my newsletter a little bit, gave myself no room whatsoever under this trend line. We got stopped out far before this slide to $20. But these cruise ships eventually will rebound. And if you're willing to take the volatility on some of these travel stocks, and my advice would be to just get your stop in, because you don't want to be the one who's trying to buy Norwegian at $30. And before you know it, you lose 33% of your position from a period of November 5th to November 29th, folks. I wouldn't have thought that was possible. If you said to me in November, right, what's the downside risk of buying Norwegian? You said, is it, you know, could I lose 35% in a month? I'd say, they might be out of the woods, right? You know, I know they're very volatile, but I don't know if they're going to get cut in half. But I'd say, guess what? Get your stop in, because you never know. And there's your evidence of it, down to $19 and change. And this may not be over. This new variant, there's going to be a news cycle here. You know, the media likes that they have a new variant to cover. The market obviously paid attention to it to some degree on Friday. So this news will persist. And some of those news rounds may spook some of these travel stocks, in particular the cruise ships. You know, they are the most vulnerable, would be probably the best way to put it, to something like a new variant really hitting. I mean, look at, you know, same deal. You have Carnival basically shaving about a third of its share price off as well, from 25 down to 17, let alone we were just trading at $31 back in June on this stock for Carnival shares as well. Now, on the flip side of that, we're going to talk a little bit about this as well. You want to talk about some strength as we get into it. All right, we pull up the 15-minute. Now, Amazon, you did trade down lower, okay? But we're already back to 35.36. I mean, you look where we are. Amazon was trading on Wednesday, folks, at a low of 35.56. We're within about $10 of that. And I was chatting with my dad this morning. He's going to be doing his show live at 3 o'clock. He'll be doing it from probably the balcony, maybe, of our beautiful rental in the Keys for the week. We'll be doing live on broadcast. We're going to talk about some cannabis stocks when we get back. Canopy growth held up pretty well, some of those pot stocks after getting beaten down on Friday. We'll be right back, folks.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
All right, welcome back, folks. Jumping back to the market, we're going to talk a little bit of Black Friday in a moment. We'll talk some cannabis stocks. We get the S&Ps right now up about 48 points. 48 points, that collides well with 48%. How about shoppers' store visits rose 48% from 2020. Now, 2020, unlike a year like any other. Black Friday, traditionally the busiest, most important day of the year for retailers, is in the books. Results likely won't materialize until early 2022. Some clues in terms of this Bloomberg article, in terms of what they're talking about. Store traffic rising 48% from last year, still lagging 2019 levels, though. Think about that, right? Over 2 years. And I would say people are anxious to get back out, people feeling very comfortable shopping to most degrees, at least in the U.S., and still not back up to levels seen in 2019. A big portion of that, talking about online, would be my opinion. Still trailing by 28%. Check that out, right? Visits to stores and shopping centers climbed 48% from a year ago, while trailing 2019 traffic by 28%. One reason for this year's gain wasn't larger is that retailers spread out traffic peaks by starting holiday deals early. Yeah, it does seem like Black Friday sales have been going on for like 2 weeks, right? And it seems like there's no push to miss the sale. Like today's Cyber Monday. That's going to be the next article that we're going to talk about there. Cyber Monday, in terms of what they're looking at in terms of estimations. Adobe Digital Economy Index expecting Cyber Monday to bring the biggest holiday shopping of the year, well, with consumers projected to spend between about 10.2 and 11.3 billion. Check that one out. On social media, users are already discussing deals and whether to invest in new purchases after a disappointing Black Friday. My sentiment on this is that the holiday season is never going to end this season, folks. We're kind of all attuned to big sales. There's no fear of missing out as much as recent years. Like, I'm going to look for some deals, maybe do some Christmas shopping today, maybe when I get off the program. But there's not as much of an incentive in my mind to feel like if you don't buy something today, that deal is gone forever. Yes, there's probably going to be some remarkable deals, probably on Amazon, on Walmart, on Target, right? Kohl's, TJ Maxx, the likes. But it seems like this holiday season is just going to persist forever, because even if you do all your shopping ahead of time, there's still the incentive to be shopping around holiday season. And so we'll see how that hits. But nonetheless, interesting. And we jump back to some of those retailers in particular. We got Amazon shares right now trading up about $40. So you're going to pop more than 1%. You see the volatility it had on Friday. Now, Amazon was actually higher for a period of time in terms of toward Wednesday's close. It did sell off a bit towards the end of the day, ended at around 3,500. We're back to 3,543. Now, I talked about the pot stocks, okay? Check out the pot stocks. Now, not finding a bid on Friday in any way, but this stock has been decimated, folks. This would be one that in the same way, if you are going to buy any of these pot stocks, you could either have two plans. You give it a super tight stop, or you realize that the money you're investing here is almost all risk capital. Because if you go from $56 and change to 10, you better believe there's a chance that you're going from $10 to zero. And I don't imagine this is going to happen, especially on some of the bigger pot stocks out here. Canopy, they have a huge investor in Constellation Brands. But maybe the selling is done, because I found myself saying, you're looking for bargains potentially on Friday, folks. If you think the sale was overblown in terms of the sell-off on the market was overblown, then you should be looking for bargains. I mean, it was a bargain potentially on some of the cruise lines, on some of the airlines, right? Even for like Norwegian is up more than $1. Folks, $1 on a $20 stock from Friday's close, let alone you're up $2. That's a 10% pop from Friday's low. Okay, let alone a 5% pop from the close Friday. Well, all things considered, though, you just dropped, 15% was your high to low on Wednesday. So moves both ways. But, if you're looking for stocks that you could take advantage of an overblown sell-off, which many people think Friday could be, okay, I jumped to these Canopy stocks. I said, hey, you know what? Maybe this, and this is before I saw Friday's price action, right? I said, you know what? Maybe, and I got to go back to even find the COVID lows, which is remarkable. Let's put this on a 3-year weekly. All right. Maybe I said to myself, you know what? I pulled this open on Friday, and I knew that Canopy was already in the 11s. Okay. I knew the market was getting decimated. Usually Canopy is a more volatile stock than the general market. And I said to myself, you know what? Maybe Canopy's down to like $10. Maybe it's down to $9. Maybe this is a good position that I can get some Canopy, right around that $9 area. Maybe you set your stop below $9 somewhere, $8.50, $8.75. Maybe you do something like that. Maybe you give it a little bit more room to $8, right? Depending on your risk profile and how much you're willing to give it. But the point being, I pulled up Canopy on Friday and it was flat. I said to myself, how is that? How is the Dow down 3% almost, the Russell down 4%, the S&P's down 2%, NASDAQ almost down 2%, and the pot stocks that can't find a bid going on 6-9 months aren't selling off? Well, the only reason I could think of, folks, is that everybody that sold has already sold. And maybe there were a lot of people like me out there that for the
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner, powered by its acclaimed TAS.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. Jumping back to the markets. I appreciate you staying with me there as we got caught off a little bit and coming back. So this is interesting. Normally I'd come back at about 30 past, but we ran the break a little bit early there because of some technical difficulties. The cool part about that is that we're going to come live on the air as the market opens in less than 2 minutes, 1 minute and 50 seconds to be exact. And we got the S&Ps right now up about 50 points, 46.45. Going to be an especially interesting open. Not often that you have the Dow down 1,000 points on half a day of trading on Friday. Things recoil a bit, to say the least, this morning, and as we get ready to trade higher in a big way. Just reading some of the comments we got going on in the den, the YouTube Tigers Den. Everybody's ready for that open. Gotta love it. Now, part of what I was saying there, as I got cut off a little bit, was just talking about kind of a perfect storm of fear that was allowed to grip the markets on Thursday night / Friday. You had this new variant. It looked like there were some variations within the spike protein itself. You had the WHO holding a special meeting on Friday. You had in the middle of the day Friday that they came out and actually gave it a name, a variant of interest, Omicron. So all of that kind of combining with a very light market to send things into quite a fear circle. Now, what I will say is that over the weekend, calmer minds seem to have prevailed, pushing out that, you know, this is not February of 2020, March of 2020, April of 2020. It looks like, and there's no certainties, folks, everything is moving forward and we're discovering as things move forward new things, okay? But it looks like the vaccine should be effective to some degree. Maybe they'll be weakened to some degree, but they won't be just zeroed out. We have many different types of treatments now that are applicable, whether you can treat people, whether you have, you know, from Merck, etc. Very different scenario than the beginning of the pandemic. So fear probably overblown. I stated at the beginning of the show, the one thing that I try and wrap my head around as a trader is that the only thing to especially fear is the fear that somehow we could get rising hospitalizations among the vaccinated, causing a surplus of people in the hospital. That would be the greatest concern that the market would have, folks. Keep your eye on that one. You know, there's no certainties to that. We're all trying to figure that out. But the market is only going to care to a radical degree. Now, it cares, okay, because you're already seeing travel restrictions put in place. It looks like this variant will be something that it could become the dominant variant. So countries are doing their best to stem that acceleration. But again, that doesn't bring it back to March or February or April. And listen, I've been out here since the beginning, folks. If you haven't gotten your vaccine yet, the new variant, I encourage you to go out, talk to your doctor. It is safe. It is effective. I encourage you to get vaccinated. I got my booster already last week. I'm ready to go. And it's just being as careful as you can, doing everything you can to avoid the spread of this virus, to protect those around you that can't get vaccinated potentially, and yourself. Got 2 young kids in the house that aren't even the age of 5 yet. Those children don't have that option yet. So I'm doing my part to keep those people protected since they don't have that option. Now, with that said, I'm out there talking about get vaccinated, talk to your doctor. It is the way that we get out of this thing, okay? I'm also out there saying, hey, this fear is overblown, folks, okay? Friday, the world is not ending, all right? I'm sitting here from the balcony of an Airbnb vacation, right? Everybody was, like, clue that into where we were last March and April, right? Yes, people were going away, but nobody was traveling. Everything was shut down. There's no fear in terms of a radical difference from Wednesday to Friday. It's not happening, folks. That's the opinion. You get a sell-off of 2-3%. Now, here's what I'll add to that, and it's quite a rabbit hole in terms of the chicken and the egg, as in how far down the hole do you go. That's a fear that could exacerbate selling, though, that could reveal that there are sellers in this market a little timid at where the S&P is, considering what's going on with some of the equities and inflation and profits, okay? I mean, we look at this S&P chart on a weekly. I mean, you better believe that a sell-off is possible, folks. We're sitting within 100 points of all-time highs, and the S&P is just traded from a low of 2174 up to 4740. I mean, I don't know if I'll ever see another run where the S&Ps, and I hope I don't, because if I do, and it goes both ways. I hope I do, because I hope I live long enough that probably you're going to get a pullback like this for some reason over the next 10, 20, 30 years. It's just how things work. I mean, hopefully it's 10, 20, 30 years. I mean, the last one we got was 2008, right? 12 years in the market. We got a complete sell-off. But the only way that you rise from 2174 to 4740, the only way you rise 140% in an index like the S&P in under 2 years is if you have a radical sell-off prior to it because of some bad news in the market, whether it's a depression, I'd say war, but war sometimes can be good for the market. Maybe it's bad for the market in the beginning. But keep that in mind because, man, sell-offs are possible without COVID taking over the market, all right? Inflation is probably the boogeyman that the market should be fearing much more so than COVID at this point. Excuse me. Okay, let's jump down the line for some of the stocks that are moving, and it's going to be some of the culprits that were moving on Friday. Moderna trading higher this morning after trading higher on Friday. We talked about them. I mean, look at it. It's basically everything we talked about already. We talked about the airlines. We talked about the cruise ships. Bitcoin is trading higher this morning as well. We got Bitcoin right now up about $3,000 at 57. Similar deal with Bitcoin. You got to back things up. You just go back to September of 2020, folks. You're talking about, 14 months ago, and Bitcoin was hovering at around 10 grand. So all things considered, this sell-off sitting at 57,000, basically chump change the sell-off that we had in Bitcoin shares. Crude rebounding nicely to $72.50. Same thing with crude. You go from $6 to 85, folks. You came into 2020 with a price to crude at $63. We're still $10 above that price level, and supposedly, all forms of business were ceasing to exist in the beginning of 2020. We jump to Zoom. Now, Zoom's been a real headache recently in terms of lower prices. You trade down hard on earnings. I think that was last week. We got that. Let's pull it up. Yes, it was. Tuesday, they had earnings. Trade down to 195 on Tuesday. Friday, you get the pop up to a price of 240, and just like that, we've almost given it all back. Now, I talked about Zoom on my show, folks, on Wednesday, and if you're looking to get in Zoom, you could start dabbling in this equity. You really could, folks, because you back things up to the beginning of 2020. Okay, now this is before the pandemic, and Zoom was above 100. that company has changed for the better for the long term since then, all right? They have actually become almost a verb in the English language. You know, people say, why don't you Google something? Google is a verb now in the English language. You know, let's Zoom, right? It becomes almost a verb in the English language. Let's Zoom. That was not a verb coming into 2020. Okay, this company is so well known now across the entire globe, not to mention turning that into profitability. They take in $1 billion every 90 days. They're making money. Point being, you start getting back into this 150 area, 100 area, I don't see Zoom coming back to a price level that you were at pre-pandemic. Not happening, folks. So you're down from 200 to 600. You want to get into Zoom, I would start dabbling already around this price point. You're going to get some big-time volatility. You're down 4% from the pop that we got on Friday. You're below any of this kind of support we had from August, okay? It does look like it's a one-way ship that could take this thing down to about 150, where it chopped around for the better part of the beginning of the pandemic from about March through the end of April. But Zoom's a strong company. They're a big-time growth company. They make money. It's always nice when you get a company that's not losing money in an area like this. Their growth has decelerated, okay? It has. But, man, keep your eye on that because they're a strong company. I do have some Zoom for talking about retirement. I have it above these price levels. But I am looking at potentially this thing gets back down to these areas here. You're talking about maybe 140 to 180. I'll be looking at adding to that equity on Zoom shares as it's down about 4% on that recoil, but still going to be around forever. Some of the other equities that we're moving, check this one out. Be careful being anywhere near China, folks. Check out the headline here. You have Macau gaming sector is lower after Alvin Chow, the head of Macau's biggest casino junket operator, and 10 others were arrested over allegedly illegal gambling platforms targeting mainland Chinese, according to a report by the South China Morning Post. You have Wynn down. You have Las Vegas Sands down. Let's check out how they're trading. WYNN. Wynn shares down about 1% now. Now, that's a weekly, okay? Let's put this thing on a daily. You drop out on Friday. You're a little bit lower today. And the way it works over there is, I'm going to jump to Las Vegas Sands as well. Actually up a little bit after trading lower on Friday as well. The way it works over there is Macau, they run junkets, so like almost like vacations, and then they bring people over from China. You bring them over to Macau. That's how they have their little gambling vacation. That's where it occurs. Then maybe they go back to China. Point being, that's a huge, huge business. If they're arresting, locking down all those people, they don't want gambling occurring in any form. And you know what, folks? You know, there's a certain level of freedom, right? And I think, you know, if you're not harming anybody, you should be able to do almost anything you want. And you should be able to do with your money whatever you want, right? Gambling, making it a crime, trying to protect people from you know, gambling. That's a tough one. But unfortunately, it hurts a lot of very poor people. In China, they're all about common prosperity. So gambling might have no interest in that long-term goal. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we got some action in Twitter going on. We jump over to the Twit machine. It's up 5.4% on the news that their CEO may be stepping down, and founder Jack Dorsey. So we pull up the 15-minute. Talk about some volatility going on this morning. You have Twitter spiked to 53.20. We were down to 45 at one point. It's now sitting at 50. You had Jack Dorsey tweeting out last night, I love Twitter. Probably on the news, potentially, that he'll be stepping down. And there is your, and this is all expected right now, folks. Nothing really out there concrete, but Twitter CEO Jack Dorsey expected to step down. Sources say it was up 11% potentially immediately on that news. Interesting action. Twitter stakeholder Elliott Management had sought to replace Dorsey as CEO in 2020 before they reached a deal with the company's management as they were trying to get him out. It's unclear who would succeed him, but if he does step down, the next CEO will have to meet Twitter's aggressive internal goals. The company said earlier this year aims to have 315 million monetizable daily active users by the end of 2023 and at least double its annual revenue in that year. Lofty aspirations, to say the least. Interesting action. You get a founder and CEO stepping down, probably having to do with some of the effort that Elliott, at least talking about, not that they caused this, but that their sentiments, right, wanting him out of there for certain reasons that may change and alter that share price for the higher, maybe the market thinking that might come to fruition. The one thing I'll say in this, folks, is that it's interesting that you get an unknown that's going to run a company like this, especially when the heat that these social media companies are dealing with. You got Twitter, you got Facebook, and coming into an election cycle every 2 years, not an easy role to fill in terms of the where you end up in terms of in the public eyes. Facebook up about 0.8% with the market, just jumping around to some of the other social media companies. Not like they'd be that impacted. Snapchat down about 0.3% today. The market's given a little bit back, holding up pretty well. I mean, we're not even up 1% today in the market. Now, here's where I'll jump around, all right? I'm going to jump to Bill Ackman. And this news was not out there on Friday, folks, okay? And this is where, says the Omicron COVID variant could end up being bullish for the markets. Kind of the counter view to everything that was stated, talking about that symptoms actually might be less severe if it becomes the variant, the dominant variant. Said the new Omicron variant could actually give U.S. stocks a boost if symptoms turn out to be less severe. COVID symptoms linked to the variant have been described as extremely mild by the South African doctor who first raised the alarm over the new strain. Ackman's comments have been widely watched throughout the health crisis, market's turbulent ride over the past 2 years. In March of 2020, he warned investors that hell is coming, urged president to shut down the country for 30 days. He was kind of early in that one in terms of talking about hell is coming in terms of just the raw impact. And this is where, for these people who are running billion-dollar operations, we've seen it with some of the politicians that were insider trading, right? The writing was almost on the wall here. And I remember early on, and this is where just trust your instincts, folks, because there was time to get ahead of this market sell-off if you really trusted it, but nobody really was willing to go there in their own head in terms of what was possible, because we had never seen anything like that. I mean, my age group of being 40 or younger is only going back to 1980, as in we haven't seen any type of a world war. We somehow live in this, where our wars have been the Gulf War, that you can watch it on CNN, as in there's been no real disruption to everyday life in any degree, especially when you compare that to a country that was going through Vietnam that had a draft, to World War II. So I think it was very difficult for many people to realize that everything could be upended in an instant. For those in the know that got word very quickly that, hey, this is going to fill up our hospitals, it can't happen, there's only going to be one way out of this, it's probably going to be lockdowns for some degree of time here to see if we can get this thing under control. Lockdowns have persisted longer than probably we all thought, but there was a real threat. And I remember when Japan stopped, they ended schools, as in they took everybody out of school. I think they did that sometime early March of 2020. And I remember talking to my own house and saying, hey, Japan is like a full-on democracy. If it's happening over in Japan right now, okay, this wasn't happening in China, okay, as in China's a big old dictatorship. They just shut everything down. That doesn't pertain to what can happen in America. But when it happened in Japan, I remember saying, if they can do it in Japan, there's no reason why our schools probably aren't going to get shut down. Because if they did in Japan, if our schools get shut down, where are all the kids going to go? What's going to happen to the parents? Okay, there was time to kind of forecast what was at least possible at that point, and the market eventually started paying attention in a big way towards late February. I also remember that I went on, and let's just pull back the S&Ps, because I went on Amazon and bought myself, good old Amazon, some masks. And I remember doing it late February, folks. And I was probably about here in the market, maybe late February. Yeah, there's March. S&Ps were still sitting at about 3,000. And my mind went to the point that I said, you know what, we're probably going to be fine, but I'm going to go buy myself some N95 masks because I'm not sure we're going to be fine. And I just might want to have some masks around the house for my family. And meanwhile, I should have been saying, wait a second, if I'm realizing that there's a threat big enough that's causing me to go online and purchase N95 masks to protect the health of my family and myself, maybe I should think about this market and what's possible of this sell-off. And not a lot of people got there quickly, and the S&P still had about 1,000 points to go at that point, from late February to the bottom of the lows just after my birthday, March 23rd, the week of 2174, and we got the S&Ps up about 42 points right now. So keep in mind this view as well in terms of, yes, there's a new variant. We know very, very little about this variant right now. And it's easy to fear the worst, but the worst is not where we are, folks. We are well out of the worst. And as I said, I'm the first person to say the vaccines are safe. They are effective. From a risk-reward standpoint, man, it's the easiest decision you could make for your health and those around you. Talk to your doctor if you're at all concerned yourself, or make your own health decisions. And I'll say all of that. And I'll also say these fears are very overblown, at least at this point. There's nothing to say that a variant could emerge. That's why we want to get everybody vaccinated across the world, too. We're seeing it. As long as these cases are spreading rapidly, the possibility for a variant that could elude the vaccines is possible. The more variants, more times this virus mutates from person to person, that possibility presents itself. But you could just spread fear endlessly on that type of a possibility, because this is going to be around forever, folks. So those stories are going to be possible almost forever until we get it down to a negligible case count that hospitals are not even possible to fill up. But this story was not being written on Friday because the fear story was a lot more accelerated, and it probably got a lot more clicks on Friday. And it actually could be good news if you get a variant that takes over that ends up being a less severe variant somehow. And we always have the treatment options are much more preferred now than they were at that time as well. All right, jumping around to what else we got going on. Let's see what I got up on my headlines in terms of what we're talking about. Yeah, we'll jump to a little crypto. Why not? Binance. Oh, come on. I'm already signed in, guys. What you doing to me? Binance reopens Dogecoin withdrawals after Musk spat with the CEO. Musk had said on Twitter last week that the issue sounds shady. He was in a little bit of a battle. You have Binance now reopening it for Dogecoin withdrawals. Be careful in that crypto sector, folks. Elon Musk has been out there tweeting as well this weekend. Pretty remarkable actions for the richest man in the world. Pull it up a little bit when we get back. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, welcome back, folks. As we wrap up the program here, jumping around too, I was talking about a little, where are we? We were talking about a little bit of crypto. So it was Binance reopening Dogecoin withdrawals after Musk was CEO. And the only thing I'll reiterate here, it's always buyer beware, folks, but I wouldn't trust them for a second. And it's remarkable that you have the largest crypto exchange out there. And pulling up the exact quotes here, in terms of what's going on, they talked about Binance's fully open withdrawals after a quote-unquote technical glitch that spurred a heated back and forth. So they were down for 2 weeks. Traders were unable to withdraw Dogecoin for more than 2 weeks because of problems related to a network upgrade, according to a statement. Binance, the world's largest crypto exchange, said the glitch was an unlikely and unfortunate coincidence and not quite the shady circumstance that some had suggested. This is why you got to be wary in unregulated environments, folks. You can't be sure of that for an instant. You're talking about the largest crypto. This is not some one-off random exchange in a third world country. This is the largest crypto exchange in the world that says a glitch persisted for 2 weeks, preventing them from withdrawing money. That doesn't add up in my opinion either. And if it does, that just speaks to the level of ineptitude that's possibly going on at the largest crypto exchange. So be wary of any of that going on. You'd think that the largest crypto exchange in the world might be the safest one out there. Nonetheless, buyer beware on a consistent basis. We got the S&Ps up about 41 points right now. Our man Dave White and the Tigers Den talking about Twitter. They are halted now, Twitter. Let's jump over to the short-term time frame on the potential news that Jack Dorsey, their CEO, will be stepping down. You got Twitter up about 3.4%. A little bit of volatility going in both directions. Looks like the market not really sure what's happening, and they're going to halt that stock potentially on that news. I see as you're trading right now, up about 3.4% for Twitter shares. We jump over to some of the other FANG stocks as we kick it off. Amazon popping up 1.3% right now. We jump over to Google shares up about 2% for Google shares. Let's talk about the big dog Apple, up more than 2% right now, and we'll finish it up with Tesla. Look at that, up 5%. So much for Elon selling. Elon all over the tweet machine this weekend. Thanks so much for tuning in, folks. Joining me. Stay tuned. We got our man Basil up next. Of course, we got Larry at 11, Fast Market, Steve Rhodes, Dave White, Tom O'Brown will be coming live at 3 o'clock today as well. Have a great Monday, everybody.